Hello, everyone. Welcome to the second edition of Trading Tech Talk. It is Thursday, 6 p.m. Eastern. My name is Daniel, and please let me know if you can hear me by writing a 1 into the chat, if that's possible. Let's see. Perfect. Excellent. Well, thank you so much for joining. And today's topic, among other things, will be our Divergence Cloud indicator. And of course, before we start, real quick, as you know, trading is risky. Only invest and trade what you are willing to lose. Worst comes to worst. If it comes to hypothetical performance, please keep in mind that backtest results are not necessarily indicative of future performance. And today's topic, as mentioned before, will be the Divergence Cloud, which is an amazing indicator. It trades all kinds of or predicts all kinds of market moves, and we're going to cover these today. This is followed by a lot of live charting and analysis. And of course, if you have questions, we're trying to keep this session as interactive as possible. Feel free to write your questions into the chat or the Q&A, and Homa or our support staff will be manning the chat. Now, who's with us today? Well, as mentioned before, my name is Daniel. That's me here on the left. With me today is Rainer Michaelis, our trading analyst. Then I already mentioned Homa. She'll be manning the chat today. And we also have Nicola with us today. He will also be doing some analysis with the charting today, and will explain to you how to optimize some of the parameters of our indicators. And of course, you oftentimes you'll see these 4 faces at tradingindicators.com, but we actually do have a whole back office team and developers as well. And they're working our trading indicators lab, and which consists primarily of developers, traders, and designers. Alrighty, so last week, we had a small poll, and I asked you guys, which trading platforms do you use? And the results came in, and this is what we have learned from last week's poll. So 35% of users, they were using Wave, as mentioned before, an amazing platform, closely followed by TradingView, a web-based platform, Thinkorswim, TradeStation, NinjaTrader, and then the other ones. And so today, for our examples, we will be using TradingView, not because we don't want to use Wave in these webinars, but primarily because it is a web-based platform. It is free to use for anyone, and it's just the most common denominator in terms of platforms. But rest assured that our indicators and the indicators that we will be showing today, they do work on all these platforms here as well. Okay, but enough about us. Trading is not about us. So we're developing the tools, but the tools are developed for you, the traders. And we asked you also in last week's session, hey, what kind of trader are you, or who would you associate most with? And we had these 3 personas here. We had Chair, our newbie trader who just started out, but is really interested in trading, and she wants to control over her financial future. So it's our newbie trader. Then on the other end of the spectrum, we had Matteo. He's a professional trader. He trades full-time, and he's looking for tools that will allow him to fine-tune his approach. And then we had Steffi, who's the occasional trader. She has a full-time job. She trades after work or before work, and she just needs tools that will help her make better trading decision fast. And we've asked you, with which persona would you associate most? And most of you are either a Matteo, professional trader, or Steffi at around 40% each. And then Share had 5%. The 5% were just starting out. But of course, if you're starting out, please stick with us. We're trying to accommodate everyone, especially if you're just starting out. We're trying to help you get your foot in the door and get started with trading. And if you wonder why these percentages are not adding up to 100, that's because some of you said, oh, I'm neither Steffi or Matteo or Chair. I'm like a combination of multiple traders. So these are the remaining percentages. All right. Perfect. So a bit of FAQ. These are questions that came in after last week's sessions. And I just want to repeat for all of you. So one question was, or some of you guys asked, where do I find the recordings of these webinars, or are these webinars even recorded? So the answer is, of course, they are recorded, and you can find the recordings on our YouTube channel. So if you go to our homepage, tradingindicators.com, at the top right, you will see a link for YouTube. Just click that, will bring you directly to our YouTube channel. And on there is a category called Trading Tech Talk, and you will find the recordings there uploaded just a few days, or hopefully one day after the webinar has finished. How can I be notified when a new recording is available? So the easiest way really is if you subscribe to our YouTube channel. That way you get an instant notification as soon as a new recording is uploaded, or perhaps a new video, a new product is uploaded to our YouTube channel. So that's really the easiest way. If you are not a subscriber yet, I would recommend that you subscribe to our YouTube channel so that you will be notified. And last week, we also asked you guys, what are some of the topics you are interested in? Some answers were day trading, automated strategies, or strategy building with ModifWave or the NinjaTrader Strategy Builder. And if you're wondering if we are going to cover these topics, yes, of course, these are all scheduled for future webinars. So I encourage you to keep checking our announcements when these webinars will take place. Of course, they're always on Thursdays at 6 p.m. And keep checking in, as we will be covering these topics as well. And I just saw in the chat that, who was it? JC asked, will you be covering the trend radar indicator, which is currently available for wealth charts? JC, yes, absolutely. We are currently in the process of converting this indicator to also other platforms. And once this is done, we will be, of course, introducing this trend radar indicator in our sessions here as well, to show you how it can help you fine-tune your approach. Absolutely. All right. Okay, guys. So what's new at Trading Indicators? And I'm going to keep this relatively quick. In the last couple of months, we have released a new version of our 1-2-3 strike, Divergence Cloud, and Volatility Crusher indicators for NinjaTrader. And in this new version, you have these awesome sliders, which will allow you, similar to ModifWave, which will allow you to change your settings on the fly. Once you move these sliders, everything will be updated. The chart will be updated. The indicator signals will be updated. But of course, also your statistics, short efficiency and long efficiency, will be updated on the fly, which makes it very easy to adjust your parameters and to find the best parameter settings for a given symbol or time frame. And if you have purchased the Power Bundle, then you will also have access to all these new sliders. This is one thing. And if you are familiar with our Portfolio Architect tool, which is a tool to analyze the portfolio performance of your automated strategies, we have improved its functionality lately, where we added improved import features for MT4 and NinjaTrader 8. If you're not yet familiar with this tool, this is a standalone tool, which you can download on your Windows platform. You can run it as a standalone tool, and it will allow you to do an in-depth analysis of your trading strategy. For example, figure out what is my my drawdown, what is the best day to trade, what's the best season to trade, or even what's the best time to trade, and so forth. So, and you can create sub portfolios and so forth with this tool as well. And this tool works for NT8, ModifWave, MT4, MT5, and TOS and other platforms as well. Okay, so this is new with us. And now let's move over to our core topic of today's presentation, and it's called Predicting Upcoming Moves with Divergence Cloud. Now, Divergence Cloud, if you do not know it yet, it's a great indicator to spot the next market move. And in particular, Divergence Cloud will allow you to spot 4 different moves. So let's go through these moves one by one. So the first market move or prediction it makes, it's about price starts an uptrend after it finds a bottom. as a result of a downtrend. So we call this the bottoms up move. And basically what this means is that, as you can see here on the chart, a downtrend comes to an end and reverses into an uptrend. So this is one move that's predicted by our Divergence Cloud indicator, and we call this the bottoms up move. When there's evidence that the downtrend has come to an end and the new trend and uptrend will start, Divergence Cloud will give you a signal, as you can see here, that this could be a good idea to go long. So this is move number one. Move number two is what we call bullish pullback. Price continues the uptrend after a healthy consolidation. So what does this mean? I imagine you are on an uptrend, but of course, every uptrend doesn't go up in a straight line. It takes breaks every once in a while. And we call this consolidations, where it may even go a bit down. Divergence Cloud will allow you to spot these areas of consolidation and predict that from that point on, market or the trend will continue in the upwards direction. So for example, here you have such a consolidation, price goes down a little bit, retraces, which can be a good entry point to go long again in the hope that the uptrend will continue. A similar scenario we have here. So this is the move number two, which is predicted by Divergence Cloud. And on the bearish side, we have a move that's called tops before drops, which basically means that price will drop sharply after spiking upwards. In other words, after an uptrend, the uptrend might end and will reverse in the downside direction. Basically, the uptrend is reversing to a downtrend. Divergence Cloud will detect this by giving you a signal as well, which basically means it's a reversal of the existing trend, the uptrend, to the downside. And the market move number four is what we call bearish pullback. It's a bit of the opposite of the bullish pullback, where a downtrend continues after an area of consolidation. So imagine you're in a downtrend, as we can see here. Again, just like with the uptrends, even a downtrend will not continue going down in a straight line. It will take break, it will retrace at points. And when Divergence Cloud finds evidence of such a retracement, along with evidence that the downtrend is going to continue after taking a break, it will give you a signal. And we call this the bearish pullback. All right, so this is really what Divergence Cloud has been designed to do. Let me just point out before I continue is that the bottoms up, basically the reversing of an uptrend to a downtrend, and the tops before drops, the reversing of an uptrend into a downtrend. Well, I think I said the opposite here. So bottoms up was the reversing of a downtrend to an uptrend, and tops before drops was the reversing of an uptrend to a downtrend. These are quite rare. Trends don't just reverse like this. As I mentioned in my last presentation, a trend is typically your friend, and the chances that the trend will continue after all is quite high. And that's why the price move, bullish pullback, and bearish pullback are much more frequent. And Divergence Cloud, in fact, allows you to detect these pullbacks, which can be great entry points for your next trade in the direction of the predominant trend. Now, Divergence Cloud, just like 1, 2, 3 strike, gives you entry and exit signals. It gives you a glowing cloud around the price bars, which shows to you whether you have a bearish or bullish divergence situation. It works basically on all time frames, chart types, OHCL charts, Renko charts, tick charts on all asset classes. And of course, it is equipped with our IET real-time statistics. Now, just to give you some examples before we go to live charting, long and short entries look like these. These are long entries here. These are the bigger green triangles. And if you're looking for a short entry, these are the ones here, the bigger reddish triangles. For the exits, these are denoted by these smaller triangles in the opposite direction of the entry. So the upwards facing triangle after a short signal, and the downwards facing triangles after an up signal. Divergence Cloud allows you to direct or detect all kinds of market moves. In fact, 4 different market moves, including the early detection of reversals. And we have equipped Divergence Cloud with this glowing color behind the price bars, which shows to you whether we have a case of bullish or bearish divergence. All right, and last but not least, Divergence Cloud, as mentioned before, is equipped with IET, which are our real-time statistics, which comes in really handy to find optimal parameters very quickly, because you get instant feedback. It allows you to identify long or short bias, basically telling you whether Divergence Cloud works better in the long direction or the short direction. And ideally, it will not only tell you when the odds are stacked in your favor, but also tell you when the odds are not stacked in your favor, in which case you would stay away and not trade. And this all comes completely for free with Divergence Cloud. It's just on the chart all the time. No back testing or automated strategy is required to see these statistics. Okay, before I give the word to Rainer and Nicola, Homa, are there any questions?
I'm sorry, I was on mute. We did have a question about IET, but I think that it might make sense to address it with the statistics. Somebody wanted to know how IET works with the Divergence Cloud.
Okay, perfect. Yeah, we can discuss this as we look at some charts. All right, so in this case, enough talking from my side. Let's check out some charts. So Rainer and Nicola, are you guys there?
Yes.
Yep. Perfect. So take it away.
Okie doke. 1 second. I just have to share my screen. Good. So can you see my screen?
Yep.
Oh, you can see my screen. Okay, perfect. Yeah, let's talk a little bit about the Divergence Cloud. It's actually pretty much, I would say by now, one of my favorite indicators because it works so good. I always love when Daniel gives the overview. It's we can do now a quiz going through these things, but let's recap a few things. I think what's really good about it, it's based really on price trend, momentum, volatility, and that's really important for all the trading. You need to have these things, and it incorporates all these things. And you have the clouds that really give you an idea. The green clouds represent the bullish ones, where volatility goes down and the price is accelerating, and the opposite with the bearish one. That is really very, very helpful. And when we look at these, at the indicator, let's go through a couple of settings here so you understand a little bit more about it. And later on, we will have some tuning, and Nicholas will go into more details what's the best way to adjust them. But you have logic parameters here in the Divergence Cloud. And there's a couple of things that are quite important. I would say the top 3 are the most important things, whereas the other 2 here, this is more or less to fine tune it the way you need it. Every true range, that is really the period that it's where it used in relative to the volatility calculations. The larger you do this, the slower the change is going to be, and the smaller you do this time frame, the faster the changes will be. It focuses on the more recent price action. We have the divergence look back, and that defines the look of the area for the trend reversal and continuation. And this also should be adjusted to the way you trade. If you are in a smaller time frame or higher time frame, you have to make sure that you have a look back that makes sense, which means if you're in an intraday and you have like several hundred bars, that would make no sense. So you have to really adjust this. We're going to go into this later. And another very important one is the price movement in average range in percent. That means how many signals do I get? If I go here a lot shorter, you will see we get a lot more signals. Good. This is a great effect. Yeah. Let me show it here. We get a lot more And we can also, I have a few examples where I can show it, where you then become get too many signals, and that can cause some jitter where you shouldn't really do this because it's going to get in and out and in and out. So we'll go through these settings a little bit later. And then you have, of course, your exits and short exits. This is really something I always keep them very small because I just want to have an idea when it says exit here or there's a potential exit. But I actually, as mentioned last week, this is not how I really define my exits, because I have a different way to define my exits. And that's actually a good point to do a little recap. Let me show you a few things before you should trade, because I think that's very, very important to always look. We talked about last week about a trading game plan. And let me just slide that in here. Can I slide? Can you see this? No, you cannot see this, right?
Yes, we can see it.
You can see it, right? Mm-hmm. So when we, the trading game plan we should have is, what we always do is we draw the support and resistance lines, which we're going to do in some examples. We determine what the trend really is. In the future, we will have something also incorporate like the trend radar, which is an absolutely great tool because it looks at multiple time frames and gives you a much better view on what the trend really is, and a very quick one for people that are not so crazy about going through all these different settings. Then we look at the market behavior. Is it a really trending market? Do we have a lot of consolidation and so on? And then we can look at our indicators and look at what they're telling us, which is really a perfect way. And I'm going to show you some settings, how I use them in a combination. Something I also really recommend for everybody is, before you do any trades, you should have really an idea about your risk reward. And let me show you this slide here. We did go through this one. Is stock and up down trend. This is only for people that are working in a portfolio. Do I have all stocks from a tech sector or not? Try to avoid this, because if the tech sector goes down, you're just going to have a big drawdown. So we try to avoid having everything in the same basket, put the eggs in different basket. And then when you have these zones put up, you have to make sure is there enough room to run. Are there many gaps? When there's gaps, it's always an alarming sign. So be careful here. Then when we go through the 1, 2, 3 strike and the divergence cloud for potential trades, where are we currently? Are we under or above resistance or support zones? I would be careful entering a bullish trade just below a resistance or a bearish trade just above a support, because there is good chance that it will bounce. So we should wait until the resistance is broken. Then does the divergence cloud, for example, support my trade ideas? Does it really do this? Because as said in the previous sessions, these are indicators. They're not responsible for your trade. You still have to make that decision. They just should help you to make this decision better. And then you can also use a simple trading strategy. Some people use the 3 crossing the 8 or 3 crossing the 12 in order to see when would be a best entry. That's really, really up to everybody the way he wants to trade it. Another thing you also should think when you do your trade setup is keep a log and find out how many trades do you normally win. Is it 40%, 50, 60%? Because that's very important for your win ratio, how to set it up. Because if you have a 1-to-1, if you have a 50% win ratio, and you have a 1-to-1 risk to reward, you end up with no profit, but a lot of fees from the broker. And that makes no sense. So you always have to make sure that you have a risk to reward ratio that is in your favor. I normally have depends on what I'm trading, but my risk reward ratio is at least 1 to 2, 1 risk, 2 win, or 1 to 3. And then you can even have, like I showed here, you can have only a 40% win rate with a 1 to 2 ratio, and you still end up with a profit, which means you're going to have 6 losses and you have 4 wins, and you have a win. So that's really, really important. And another thing, and then I'm done with these slides, is often people say, well, I need to trade in order to make money. There are three positions. They're long, short, and cash. Cash is a position. If there's no market to trade, if there's not really the things in your favor, just don't do it, because you don't have to just jump later on and try to make up for what you have lost. Okay, let's jump in here and look at a couple of examples and then do some adjustments. I don't want to go through all this one, so we have a nice trick to turn them on again. This is always what I do. We have now here, no, here we go. We have set up now here some resistance and some support zones. I showed you last time. It's quite simple. You connect the pivots. This is pivot here. This is a pivot. This is a pivot. This is a pivot. This is a pivot. And you connect them, and you will find out very fast that the stock always somehow comes back to the same pivots. And that's very important, because what they do is they give you a clearer view on how far you can go and where the stock could run. And then when you go there and say, okay, let me put in here the divergence cloud that I put up right now, you can see very, very easily, can see where does it really make sense to go in and not go in. For example, let's have a look at this one here. We have a resistance zone, which becomes a support zone. As soon as it breaks through, this becomes a support zone. And at that point, the indicator detects a trend reversal, or you can also say a continuation from here with a pullback, which is a little bit longer, but doesn't matter. So we have this here. It's actually a very beautiful entry, because it's just above the resistance zone or just above the support zone at that point now. And it really shows you how nice this here supports it, how far you can go. At this point, when you hear, you don't know this yet. So you can set easily, when you have a trade entry here, you can use some very simple tools. Sometimes people ask me, what should I do? I say, well, check out this something. Take a simple 3/8 strategy. You see an entry point here, and then you can do, for example, a nice 2-to-1 ratio. Let's say, what do we have here? Our stop. Come on, TradingView, why don't you show it? Why don't you show it? Let me see if it's long position. Yeah, I should show it, right? Why is it not showing it? I don't know. Anyway, you can use these tools here in order to see where is your stop loss and how far should you go in order to get at least a 2-to-1 ratio. Okay, so here we have a 2-to-1 ratio. If we just put that below the support zone and go up here, then we know we should go at least to about here in order to have a favorable risk to reward. Not sure why it's not showing properly. Oh, here we go. It was way too low. So we put it here. There's a nice entry. So we put this here under the support. And now we want to have a 2-to-1 at least. So it gives you an idea. Does it make sense? Well, very simple. Check out some previous runs. This run, that run. I think it's completely possible to do this. So you can have really this one, and then you can also use your 1-2-3 strike. And you see the 1-2-3 strike also shows you a nice setup here. So you got now 3 supporting arguments. You have the support zone, the 1-2-3 strikes, and you got the divergence cloud that shows you that we are in a bullish trend here. So that's a really no-brainer to go in here. Okay, let's go in a little bit different one. I have another one here. Probably I saw one when I looked through. There was a nice, let me just check. Let me see. And if you guys want to have some stocks that we should look at, just do me a favor, type it in the chat so I can see it. Actually, I don't see the chat right now, but Homer's going to tell me, and we can look at these.
Actually, we do have a couple.
Okay.
So when you're ready, Rainer, tell me.
Yeah, I just want to show him a couple of other things, because I also want to get the knowledge from Nick here when we have him in here, because he can explain a few things. So I think that's just beautiful the way that works. You see here a nice bullish entry, a nice bearish entry. Here, this one, I would definitely wait till it breaks through. Here we get a 1, 2, 3 signal, which is actually nice, and you could run it. So it works really like a charm. So I really am getting quite fond of this indicator, because it really supports my decision making quite a bit. So let me show you another one, because there are some things that people also ask all the time. How am I going to do this when this happens here? What we're doing right now is primarily swing trading. That's okay. And we do it on a daily basis or something like that. But of course, you can use other time frames as well. So if you look at the chart here, you see beautiful here, we have a nice setup here again. We have a pivot here, a support zone. We got a bullish divergence cloud plus the 1, 2, 3 strike. I mean, this is a no-brainer to go in here. And then we have an area which I put a box around it, which is actually a consolidation phase. God beware, don't trade there, because you're just going to lose money, because you're going to get stopped out and it's like bouncing back and forth. So don't do it. Then you have a channel upwards. If you know how to trade a channel, it's great. You can go in and always ride it up. In a channel like that, I would never take the bearish trade, because just over time, if the stock doesn't move, you're going to hit the bottom part. So don't do it. Go with the trend. Let the trend be your friend. And then we're out again on the channel. And let me show you something. People say, well, then I want to do it in a smaller time frame to get a little better idea. What happens then is really something. But I don't have to scroll too much, but I can do it this way. I set a marker here. And now let me go to an hour, and then something like this happens. And then people say, oh my God, what am I going to do? What am I going to do? I'm totally lost. See this here? You're going to have entry signal. And here I would like Nick to jump in, because he can give us some great ideas how to avoid this and how to really tune this, which I, a little hint, hope that this will be automatically sometime. That you can tune this to fit your trading style and also not getting all these different signals. Nick, can you jump in and give us some ideas how to best adjust this?
Sure thing. So I'm going to share my screen.
Yeah.
Okay. All right. So I'm on the same chart as you, Reiner. Can you see my screen?
Yeah.
Okay, so right now I'm on the hourly chart, as Reiner was just on with NVIDIA. And a big point I want to make is when you're trying to get good signals from these indicators, there's always going to be like a magic bullet or a specific set of parameters that work the best on that symbol, on that time frame, at that exact moment in time. But you don't really want to go looking for that exact set. Instead, you want to understand how the indicators work, what's the logic behind the signals they're generating. And that way you can just very easily have some rules of thumb that you can make for yourself of how you're going to adjust the parameters to quickly improve the signals. So one thing I'd like to address here, as Reiner was pointing out, is I'm on Divergence Cloud. I have a Divergence Cloud applied to the chart, and I'm looking at the hourly chart on NVIDIA. And in this flat area here, when there's big volatility, we have this nice short signal, a nice long down here, short, long. But then in this consolidation phase, we've got a lot of jitter and clutter where we're getting these signals that we don't necessarily want to trade. And to figure out how you can change the parameters to fix that, I'm just going to do a quick explanation, really simple high level of how the indicator actually works. So let's take a look at one of the signals it's generated. I'll look at this one right here. And so here, Divergence Cloud signaled a long entry, detected a bullish divergence. And the way Divergence Cloud works is essentially it looks at two factors. One is price trend, or the momentum of the price trend. And the other one is how volatility is changing. And at any bar, in this case, it's the bar where the bar was signaled, the indicator looks back a certain amount of bars. And that amount of bars is called the divergence look back. It looks back 15 bars in this case, as I've highlighted here. So to get this signal, what the indicator is doing is it's looking back 15 bars and it's first considering, well, what did price do? And it found that price momentum increased. It sloped upwards. We closed higher than we started in this zone. And the next thing that it considers is what's the change in volatility? So at this bar, how is volatility looking relative to the baseline volatility compared to at the start of the divergence look back? So right now, and the length of the time that divergence cloud looks back to calculate volatility is set by this parameter called ATR period. And it's not actually just the ATR, it's actually a derivative of the ATR, but this is the period that's used for the volatility calculations. So in this case, on this bar, we found that the indicator found that price momentum went up and price momentum went up and the volatility, or essentially in basic terms, the average size, let's say, of the bars, how big are they? How volatile are they? How large are the candles? How did that change over this period relative to the period that started back here, which I'll show with this zone? And what the indicator found is that the average size of volatility actually shrunk. So we see that we used to have more volatility. This shrunk. We had decreasing volatility, and simultaneously we had increasing price. And to Divergence Cloud, this is a bullish divergence. Price is stabilizing and price is headed upwards. But back to the main point, we've got all this jitter, right? And one important thing I want to zone in on here, because jitter in Divergence Cloud is really the main thing you're going to find. Hey, I don't want all these signals. How do I get rid of them? Well, there's actually a parameter for that. So this increase that Divergence Cloud spotted right here, this price increase, is not just any price increase. It actually needs to exceed the value that you set here, the minimum price move in ATR percent. So this parameter, if price, in this case, this price increase was more than 200% of the average size of bars in this look back. Okay, so this parameter, if I set it to 500, it's probably going to eliminate that signal, because the price increase there just wasn't large enough for Divergence Cloud to say, hey, this is a bullish trend sign, let's get in. So what this parameter really acts to do is it helps you filter out flat regions where price is generally sideways, because you're forcing the indicator to wait for a sizable relative change before signaling any sort of trend change or divergence. So if we zoom out and we look at this flat zone that Reiner was showing, we've got all of these signals here in this flat zone. And what I would do, first of all, if I want to eliminate these, is I would hop into the indicator and I would just try increasing it by some multiple, let's say to 300. And right when I increase it to 300 alone, we've already eliminated half of those signals, and the signals that are left, just visual inspection, appear more logical. And the next thing I would do in Divergence Cloud, and just to demonstrate again, if I increase it even more, we're going to get less of these intermittent signals. And although it'll be a little bit late, it's waiting for the big move on the larger moves, we're going to get rid of this kind of sideways chop. And the next thing you want to consider with these indicators is what time frame am I on? And on larger time frames, the divergence look back. So basically the divergence look back, I'm going to highlight this region again, is the space you're looking at. Let me just return to the settings we had so this makes sense. Okay, is the space you're looking at to determine, okay, is there a divergence happening over this region? Is it bullish or bearish conditions? It's basically like the twitch muscle fiber of the indicator. It's how fast is it reacting to these changes. And what I found is on shorter time frames, like the minute or the hourly, as opposed to the daily and weekly, the higher time frames, these changes are a lot more, they become obvious more quickly. There's like a spiking bar that makes the move more obvious than if you're looking at it from a high level like the daily or the weekly. So what I tend to do, one of my rules of thumb is, first of all, I increase the minimum price move in ATR, but then I decrease the divergence look back. So I'm going to cut it in half, let's say 7. And what I find for smaller time frames is this, almost without fail, or a lot of the time, it increases the reliability of the signals and their profitability. So actually, let me just make sure that even makes sense in this case. Got some nice signals. Actually, up here we see the percentage. So this is the percentage of exits that are profitable. And we've got 86% profitable exits on the long side, 57% on the short side. If I undo my changes, I go back to 200 minimum price move, they get cut down. I believe one of them got cut down. Okay. And if we increase the divergence look back to 15 again, we see another decrease in percentage. So I'm not saying this is some sort of, immediately do this, but for me, that's a rule of thumb I found because I kind of understand the indicators. And I think that's important to do, to understand what they're doing, why are they making the signals? And for the different timeframes or asset classes you trade, you'll find, these quick 1, 2, 3 steps that you can follow that will generally increase the efficiency and improve the indicator on your chart.
Yeah, and Nicola, if I may chime in just for 1 second about these statistics that you see, these are not ratings of profitability because they do not take into account how big your winners were or how big your losers were. They're just the ratio of winning signals versus losing signals. So with Divergence Cloud, it is often the case that your winners, they outpace your losers, and they can. And even with a setting or with an efficiency of 47 or 50%, you can be can be profitable. It all comes down to how big your losers are versus the size of your winners, as Rainer mentioned in the beginning.
All right. Yeah, if you don't mind, I go in a couple of more examples.
Go ahead.
Thank you very much. This is, I think it's so important to have a little bit understanding how these things work that you use. Can you see my screen again?
Nicola, you have to stop. Oh yeah, perfect.
Yeah, perfect.
Now we still can't see it.
Cannot see it. Let me share it again. Share.
So Rainer, did you want to show some other symbols that?
Yeah, let me show one, and then I saw there's a couple of symbols that I will go there. Let me just show one more thing just to reiterate for people the power of this. The power of this with very, very easy to do tools, and you don't need zillions of indicators and stuff like that. Just those 3 indicators with some common sense give you such a powerful trading opportunity. What you see here is PayPal. We know PayPal, I checked it before, is right now in a downtrend. We always should do this by going a little bit out and look a little bit from the bird view, because otherwise we get caught up in too fine kind of areas, and they give us not the right view. So just to recap a little bit from last week, I showed you, look at the pivots. When you do this, look at the pivots and do this without any indicator. It's really paying off. And there are tools out there, you can use them too. Sometimes I like to do it manually because it gives me a much better insight of where I am. So I don't want to use the tools. They're good, but it doesn't take long, but I get a much better feeling because I look a little bit more exact. See, this is even continuing here. And once you have this done here, it's really, and if you have questions, you got to send them in and we can help you with this one, but it's really, really not difficult. And once you have this done, you have a very, very easy way to look at these things. And then when you're done, you can say, okay, let me check my 1, 2, 3 strike. Where are the signals? This one is a good one. It starts at the support zone. I didn't even look further anywhere. I just see it starts from the support zone. So I think this is a really cool one. I would only take that one if it breaks through the zone, because I don't know. This would be my risk. This is my reward. So I don't want to have it. I would probably, well, honestly, I can't say because I don't know this yet. But I probably would not take it because of the gap. The gap can run, but the chances that the gap will fill are big. So I would not take this one here. This one here, I would definitely go in once it breaks the zone here. Beautiful, the way it shows it. And you can take the Divergence Cloud and say, oh, here, look at this. It shows me that there's an entry. I got the divergence cloud showing me that we are in a bullish trend. And that is a beautiful, beautiful setup you can go in. So it really helps you from the bearish one as well in the bullish one to really find very, very good entry signals. One thing I always also look here is, and I want to make it too complicated, but I definitely use something like a momentum indicator to show me if this is really something that I would like to do. I will next time go a little bit more in detail to look also if we have the proper momentum in here. I'm not going to go through this one, but I got questions. Why do I have these other fields down here? And I didn't want to just leave them blank here. I definitely use something like that, and I can give you the settings, not a problem, because this shows me very clearly when we are in a situation where we do have a positive momentum that even supports it. And there's so many supporting things that this has got to be a winner. So this way you can put the odds in your favor. So this is really, really simple. I also want to show you one more example, and then I go through the stuff that you sent me. I also got questions from people and say, well, I'm doing intraday work, and how's this with intraday? I think we need to do a session here, but I don't want to chicken out, and I want to show people an example. I don't want to publish. Why is it doing this? Okay, I want to show people an example. This is from today. So this is actually from today to just give you an idea how great this tool works. I was trading the SPX today because it looked like we're going to have a great reversal today. What you see here is the opening range from today. I always put this in the opening range, and then the top of the opening range, the bottom of the opening range. In the beginning, I don't do nothing because these are all the craziness when people are just all the orders get filled. So I waited. I saw this is a nice downtrend, didn't do anything. We broke again through the bottom of the opening range. I said, you know what, let me get in. We had a bullish divergence here. I went in here with a call, got out because I was trailing it because I was not sure. Here I did one that was still positive, but was not nice because I thought we're going to go back and let me see if we try through. And here I waited till it broke the top and I got in here, and it doesn't look a lot, but let me give you an idea what it is. We have here roughly 4248, and this one here, roughly here, got stopped out, is 4280. So we're talking about 42 points, 32, what is it? 44.8? Yeah, 32 points, $32 on a delta 15. That's 16 times 100, so that's $1,600. So this is a quite amazing move, and all I need is I have the Divergence Cloud and a very simple setup. Don't need any kind of fancy stuff, and it works like a charm. It's really, really great. I really have, this is one of really my favorite tools to use. So let me go through some, because people are asking me, oh, I use it in intraday and what you do with this one. And I said, we will have sessions to do this, but right now, just so that they see it's true, we really use it intraday and it's doing a great job.
Before you move to intraday,
I don't do any intraday right now because that's a totally different topic.
I just wanted to know, so someone wants to know, why are you using 1, 2, 3 strike here with the Divergence Cloud?
Okay, for me, it's what am I doing here? For me, it's a very, very simple thing. For me, the indicators are just a way to give me a clue what I could do. I do not trade just because an indicator says go in or don't go in. I want to know, am I in an area where it is? And for me, a 1, 2, 3 strike plus a divergence cloud plus a proper support or resistance zones, these are 3 things that are really in my favor to have the highest probability in order to make this a winning trade. So for me, those signals to see here, they're telling me, okay, we are in a situation that I could go short here. That makes sense to go short. So let me see if I can find something else tells me to go short. Oh, we're breaking through the support zone. That is a very strong one. And we have a bearish divergent. These are three things that tell me, of course, here the momentum, four things that tell me, okay, there's no reason not to go short. I go short. So I personally, and everybody does it differently, I use those indicators primarily to give me a nice guidance for, yes, you are okay, you are on the right side of the trade. And when I see those exit signals, I normally never have more than 2 in there. I don't even know why it shows 3, because normally I reduce it to 2. It shows me, okay, the indicator tells me we might come to a stop. The divergence indicator shows me, oh, there's no more bearish divergence. So I'm going to have a tight stop loss here because something is going on. And the momentum shows me we are turning around. So I better have a very tight stop loss and get out here. So for me, these things are helping me to make a decision to go into a trade or not. Does that answer the question?
Yeah. Rainer, can we look at some symbols that were requested by users?
I saw TCA or something like that I saw in the chat.
Yeah.
Yeah.
That's right, TCA.
That's a leveraged ETF. I'm always a little bit critical with these leveraged ETFs. They're dangerous. But nevertheless, if I look at something like this, going for the higher time frame, you see how this is currently in a very crazy move. There is really no, I would definitely say, okay, I can probably do my channel here because this is where we're in. And what is the size of the channel? The channel is 27 to 38. So we're having about, depends on what you trade. This is very zigzag. So for me, I don't really have really a divergence signal. I don't really have a clear 1, 2, 3 strike signal. I really don't like this back and forth. Honestly, I would not trade the signal right now at all. I just wouldn't. Here it's like it's great. I mean, that's a nice downward channel here, but here on the bottom, this is look, I can even extend it to here. I wouldn't really touch it because you know, you think you go long, you get stopped out, or you go back, you have a stop loss, and you end up being barely with a win, or it just turns on you. And no, I wouldn't. It's consolidating.
And maybe, guys, as a rule of thumb, when you see periods of consolidation like this, there's 2 things you can do. Thing number 1 is to zoom into a smaller time frame, because perhaps on the smaller time frame there is some clearly established trends that you could take advantage of and then trade accordingly, or simply move on to a symbol that has a trend more clearly defined on the daily time frame in this case.
Yeah. It's with the smaller time frames, you got to be careful because smaller time frames sometimes look like awesome runs, and smaller time frames, when the market is choppy, it's very, very difficult because sometimes you get a bad fill, you get a bad exit, and a trade that looks positive is turning negative. So I would be careful with these too small of a time frames. If I put this on a minute chart, it might look different. I'm going to have some great runs. If you're an intraday scalper, perfect, do it. But then you probably have also different tools that you look at, or a different platform where you trade off that has a good real-time response. But I don't know if I would use here the 1, 2, 3 strike or divergence to scalp these things. I wouldn't. That would be.
Can we look at SQQQ next?
Yeah, it's another ultra short. Yeah. Boy, you guys pick stuff here, but it's the time. It's actually the time where that these things are so crazy. I mean, there are times when look at this, how nice it came down. And now we are in this kind of craziness. So for me, I really zoom out again, Oh my goodness, look at this. I don't even know where it was, if there's any support or resistance previous one. So, but I did look at this one previously because there's still some stuff that I put here. So I had this one too. It must have been years ago, I don't know. Yeah, how's this one here? Let me see. Let me see how that is. I would see here. Let me see if I find something that is really tradable. We here again in the channel, and this is like smaller time frames. Yeah, we have at least here it's about a $12, no, $13 wide channel, which for intraday might be good enough to do something. For trend trading or something like that, I would not use it. It's in a complete consolidation phase. So if you like an intraday trader on smaller time frames, let's say the 5 minute, you use the 1 minute, 5 and 30, you might find some nice runs here. I have not adjusted anything for this time frame, and so I don't even know how liquid. There should be liquid enough, but for regular trend trading, I would not use it right now because it's definitely consolidating.
Yeah,
sorry,
the SQQQ
guys.
is the inverted ETF that follows the Nasdaq.
Yeah.
If you're wondering why this is going down so much, it's because the actually Nasdaq ETF or the Nasdaq itself has been going up for a long time. Up until recently, of course, we've been stuck in a period of consolidation.
Yeah.
So you would have the invert price action on the QQQ, which is the invert
of the QQQ.
Of this ETF. All right. Okay, guys, I think this brings us towards the end. We do not want to go over the hour mark. We're almost there. So my question is, are there any other questions besides looking at these symbols?
Somebody wanted to look at Twitter.
Twitter, yeah.
TWT.
Finally, finally someone that is a stock that is something here. Look at this. I can tell you already. There's some right now, some action because Elon Musk wants to do some taking it over. So we are in a phase right near where I would say careful. But here's beautiful areas. Look at this. This is great. I mean, you would definitely have nice areas here that you can go back to. You have a support here, which is actually you can continue here. Other support here. Yeah, I definitely think this is something that could be valid. Here, this doesn't come all the way down. Let's see how that is. I mean, here we have one. You could go in, but that's actually March 22. This is where the announcement from Elon Musk was. So I don't know, the earnings are coming up tomorrow. So yeah, before earnings, I wouldn't even go in there. So that would probably even be for long trade to close. I would probably not necessarily go in because you know, you should keep some time, like have some time before earnings, so that when you do long trading and you know, you don't want to risk it to keep a stock. Look at Amazon right now. Everybody says it's the greatest company. I love Amazon, and today it dropped, even though it's actually doing very well. It dropped to 2,600 from 2,900 after earnings. It's expected to bounce back, but right now there is, you know, it's just crazy. The market is crazy, but there's some great action here that you definitely can trade. That is definitely a stock you can definitely do this here. I would just say wait till it either bounces off here, gets some straight action, or if Elon Musk decides to really go in and it works out the way they think, then it could be that it just shoots up again, and then you definitely probably you're going to have at least running up here, which is a nice run, you know. So I would wait till it either breaks here, or comes down, goes down, or goes here and breaks through. Right now, I wouldn't go in. I don't have a 1, 2, 3 strike, or I have a Divergence Cloud sign. So I have neither one. So I would say, currently, I would say, put it on the watch list, but don't do anything. You know, here, this was a good entry. It shows you both. This one here was also a good entry, but right now I would wait till I get an entry here. And I don't have them right now here. But
All
that's
right.
the news.
Okay, well, great. Thanks, Rainer. Homa, any other questions, perhaps unrelated to specific charts?
No, we're good. We're good to go.
Perfect. All right, so let me quickly take over the chart. Sorry, the screen.
Yeah, I traded it. Here. I got in here. Anyway, okay.
All right, perfect. Okie doke. So just a reminder, of course, every week we have the Thursday Trade Talk at 6 p.m. So our next one will be on May 5th next week. And the topic will be the volatility crusher indicator. And rest assured that we are going to consider the lower time frame next week because as you will see, the indicator is meant to trade lower time frames. It is very selective in the signals it produces. Okay, all right. So thank you very much, everyone, for attending. Thank you, Rainer and Nicolas. And of course, thank you, Homa. And I hope you enjoyed it. So see you next time. Thank you and have a nice night. Bye-bye.